Hi everyone, my name is Samir Singh Jaini, and I'm so happy to see all of you here. And we also realize that credit card is such a powerful segment that today I don't know how many people join, but it looks like we have almost 600 and 650 people registering for the event, which is for a digital business is like very strange. But yeah, I'm so happy to see so many of you joining. The way we will organize the session today is we will focus a bit about the trends in the market. We'll focus a bit also on the market side, right? For example, we will have somebody who has led a very large organization on the credit card side. So we'll hear from Sudipta on how actually the market is growing. And Sudipta comes from ICICI background. ICICI is the third largest issuer and has been sort of growing with a lot of new innovations. Then we'll get further into how new age issuers can work, and we will have all the luminaries in the market joining us for the event as well. So that's so good. I'm so happy to see all of that. And then we'll hear Ram talking about how new age platforms are built and how they are scaling up in the market. I think that's also a crucial activity out there. And then we'll go further into co-branded cards, right? Co-branded cards is something which everybody is so keen to work on, and the market is actually growing at a very rapid pace for that. I think last I heard was almost 50% of the new cards. I mean, maybe I'm wrong here and there, but a very large amount of new cards getting issued on a day-on-day basis are actually co-branded card. You've heard about Flipkart and Amazon, and we also hear about so many others like a PVR and the Make My Trip, and so many of them are actually booming a lot. And then we will close with hearing from Shalini. Shalini actually leads the entire retail banking and the whole business on the federal bank side, and they're one of the latest guys to come into the business. So we'll hear from her. So that's largely the thought process for the day. I think as people have just started joining in, what I will do is I'll start the formal session right away, and we'll take it from there, right? I think that's the intent which we have. So quick perspective on the session right now. I think, as we said, this session is part of largely the lot of knowledge sessions we do in the market. And this one is powered by Hyperface. So we'll hear from their leadership side. They are one of those new age platform which have come up the market, has been doing really well. So hear from them as well. And then we'll take it from there. So yeah, so quick background about us. We'll keep it sharp. The intention is not to belabor with you with what I know and what I should do, but a quick view. The Digital Fifth is one of the largest digital transformation focused consulting firm. We work with so many entities in the market around that business. So some of the experience we'll talk about is what we've done in the market, and we work with a lot of entities. We work across consulting, partnership, training and hiring, but only in digital finance business and nothing beyond that. That's a segment of choice for us. There's also a big event coming up, Bharat FinTech Summit. This is on 7th and 8th of February 2023. We will be in Hyatt, Grand Hyatt in Kalina, if you would have seen it, one of the largest place to do event. And if you are interested in joining it, would love to have you there. This event is from a content side going to be very, very big. And we have the biggest of the speakers joining us in that event as well. So please register for awards. If you've not bought the tickets, go ahead and buy tickets. They are available now. And of course, we are working right now on the agenda side with a lot of luminaries guiding us on that side, right? So that's largely what I wanted to speak about. In terms of the areas of choice, areas of focus, I think what we are looking at right now is to see if we can do a double click on inclusion, double click on innovation and collaboration in the event, and ideas to ensure that people understand this market much better rather than sort of getting lost on this business, right? So inclusion, innovation and collaboration are three pillars on which we will focus. I think many of you may not know much about what Hyperface is all about. Maybe Ram, you want to quickly speak about a minute for what Hyperface stands for, if that is possible.
Hey, hi Samir. Good to see you all. Hyperface is a modern credit card stack that enables banks to actually build really powerful credit card programs. We believe that every card in the country can be as awesome as Apple credit card. And that is our mission. How do we enable every co-brand credit card out there, every bank credit card out there to build fantastic customer experiences, right? And this is purely a technology problem. Technology, data science, all of that will have to come together to create these fantastic customer experiences, right? That's the problem that we've set out to solve.
Fantastic. So I think from a maybe you want to talk about quickly about the what you've done and maybe a bit about your customer base. Maybe just 1 minute on that, then we'll start.
Absolutely, yeah. So as of now, we have issued two prepaid card programs. We've tied up with AU Small Finance Bank and Federal Bank for issuing co-branded credit cards. We've also power AU Small Finance Bank's Lit credit card, which is a very unique card proposition for the card benefits. Right, it's a completely unique take, which is a digital first initiative from the bank for giving the next generation card experience to customers, and that is entirely powered by Hyperface. We also have built a pay later stack, which is similar to the Lazy Pay Simple, but catering to different segments, different cohorts across B2B, B2C credit as well. Right. So essentially the revolving credit, rotating credit, but not with a plastic forms factor. It can be closed loop. It can be it can be a semi-closed loop implementation as well. Right. So that entire stack is also something that we have. Right. So that's about us.
Thank you. Thank you. Thank you. So I think we'll now spend a few minutes primarily talking about the upcoming trends in the credit card. And again, that's what we have learned in the market. We've been also working on a report which should be coming out very soon. We'll be launching that report as part of a Bharat FinTech Summit. So you should watch out for that very, very soon coming up. I think what we see in the market is from a credit card perspective, we seeing a lot of regulatory support coming in. We had in April this year was only a framework which came about. How do you conduct the issuance and the whole process that came up? Now that has been very positive because a lot of times the fintech segments without that guidance on how it is going to work is painful, right? And we have seen credit on prepaid card went off. So those kind of challenges are not there with credit card. There's a framework built. There is a complete guidance built. So I think this is useful. If you have not gone through it, please have a look at it. We've also done an analysis. Maybe you can look at that webinar. But critical part is it's kosher. RBI is also pushing and promoting it. It is very powerful. So I think, and of course, there was a bit of a thought process that credit cards are not going to grow and we will have limited growth because of the other opportunities. But we know that it is right now growing at a very rapid pace as such. Also, there is an entry of new players which came up. RBL obviously has done exceedingly well. We have seen AU launching more and more variety, and Lit Card has done very well. Karur Vysya Bank, IDFC Bank, for example, has done excellently well. South Indian Bank has partnered with OneCard and done fabulous stuff. DBS has come in. SBM with a lot of partnership in the market has done well, and Federal obviously launched their own branded card, as well as have partnered with on the co-branded side and also a partnership with OneCard. So I think we have seen new entrants bringing new innovation, which is forcing the market to grow or helping the market to grow as well. So I think this is very powerful. In terms of customers are also evolving at a very rapid pace. I think we see today, there was an earlier thought process, the cards, there's a stigma around credit that has gone down. So we see people using credit all the time. I myself use credit regularly. I think if you were to ask me 5 years back, I wouldn't use credit other than for a home loan and maybe car loan. Today, I use it for any kind of buy, which I do, small or large. So that is one. It is no longer an elite product. So I think government is also promoting it as a product which can go for any kind of customer base. And we'll talk about the innovation around that. Account aggregators are obviously going to support issuance much more. So I have seen power of account aggregators, the kind of controls and processes they bring in, kind of, I would say, post-issuance. So issuance time, there was a lot of hitch that will go away very, very soon. And a lot of banks are already coming in. So Saimati has done a fabulous job, and all the account aggregators and banks are pulling together something brilliant, right? So that's coming up. And of course, people are looking at alternative credit rate undertaking as well, because that was bureau score 750 plus is what the criteria earlier. But I think people are innovating there. Uh, Co-branded cards, I think we have seen people because of Flipkart or Amazon or a Make My Trip or PVR. Each of these guys are opening the market much more, and many of the partners of Hyperface, as we are talking about, they are getting into it. So I think that's brilliant, and almost 50% of the new cards are actually on co-branded side, and we believe that this trend will continue to grow because they have the access, they have the data, and they will onboard the customer faster, which is the critical journey, which reduces the cost of acquisition dramatically. So 4 years back, 5 years back, we would have said that I would have laughed at it. But now I think fact of the matter is it's already established that that's how it works. Uh, I think RBI and NPCI obviously has implemented UPI on RuPay, and many banks are already launching it. I think that will dramatically increase the participation of merchants in the system. I think if you look at, we do UPI just like that, but there's no card available there, so it's linked to the physical devices. I think the moment it comes on UPI, I think that the dependency on the network will go, or the acquisition device or will go off. Pause, anything will become a pause device, QR code, and that's about it. So I think this is good. I think there's also a generic opportunity for pure digital cards coming in. So a lot of opportunities will come up. The physical card will technically go away. I think this is the next point. There's a card as a form factor. We believe will sort of discontinue because the need will go away with once UPI comes on. Why do you need a card at all? I think tap and pay was going on. There's also innovation on can we have on the mobile device itself as a card, but I think card as a form factor will continue to completely go away. Maybe 3 years, 5 years, I don't know. But credit card will remain. Card will not remain. Maybe that's how it is. So I think that's largely it. I think I'm stick exactly on time. And I think important now for us to hear from industry leaders. And Sudipta has been a friend from old times. I think we connected after a long break. So welcome on board, Sudipta. Good to see you.
Thanks, Harish. It's a pleasure to be here, and good evening to everyone who has joined on the call.
Thank you. Thank you. So, Sudipta, I think what everybody wants to hear from you, and ICICI, given the size and the quantum of work you're doing and lot of innovation you are doing, I think everybody's eager to understand from you how you have done and how you have scaled the business. So I think very, very crucial right now for us to understand from a credit card perspective, how have you grown so much in this period, right? I think 3x in 5 years is phenomenal. So what does it take to reach that scale? How do you see the future? I think broadly as an industry leader, we want to hear from you.
Thanks, Samir. The fact is that one advantage that we have inside the bank is that we have a large amount of our own liabilities customers. So that's the first port of call for us. So what we have done is that over the last couple of years, I think it's an exercise that started about 4 or 5 years back, where we actually reworked our entire credit approach process and used a lot of new age algorithms, including a lot of machine learning based algorithms, pre-approved processes that and focused on pre-approving as many customers as possible. Obviously, one of the focus was that give the customers the cards very, very fast, especially existing customers, and for whom we had the full KYC. And we were probably the first issuer who started with the 30-second issuance of our card on our internet platform, as well as on iMobile. So obviously that was the first thrust, which was use our existing data and use our existing use cutting edge credit models to make sure that the issuance becomes much faster. The second thing obviously is we figured out that there's a large section of customers who are outside the bank, and we need to sort of partner with good solid co-brand partners to funnel in those new to bank customers into the bank. And to offer our most successful partnerships, obviously one partnership is probably one of the exemplary success case in the market, which is our Amazon program. And the second is our Make My Trip program as well, right? And both of these programs, using the large digital prowess and the large digitally acquired customer base of both these partners, we are able to funnel in a lot of customers that are very relatively low acquisition cost into the bank, and they're new to bank customers. We also tend to use some amount of partner insights, what we call, which can be in the form of a score or which can be in the form of a flag, which we built together after doing an extensive data room exercise with these partners, and actually go and scale into a decision and help us sort of tighten the entire credit decision process by putting in this partner. So that is the second thing. The last thing is that we have taken every process digital. We do not really acquire physical cards anymore. So the friction whether the particular applications come from our branches or whether it comes from our DSA channels or it comes online, everything is fully digital. So the friction has reduced a lot. So customers know that if they come to the bank, they will probably get the card within 2, 3, 4 days, as opposed to the original, when we started issuing cards, in the early 2000s, where it could take anywhere between 2 to 3 weeks for you to get a physical plastic. So the timelines have also been crashed, which has actually led to a larger amount of issuance within the short possible time. So yes, growing the portfolio by that level in a short period of time is in a risk-free manner, right, is the most important part. And to a certain extent, it has been tested by the huge COVID disruption that we went for 2 years. So overall, it's a model that has worked well, and we are continuing to improve on the model.
Fantastic. I think this is how I think the last point was very crucial, which is how do you do risk-free, right? I think otherwise we'll have different problems to solve, and we'll be back to the square one, right? I think we have seen a lot of people going down, but I think interesting part is that credit card is, irrespective of the issuer, has done really well, and of course you have done even better, right? Now coming back to there's also a discussion around UPI being used as a sort of universal. I would say from a usage perspective, it will make the cards universal, right? So how do you see the market progressing? How do you see that merchants and customers will adapt to it? And of course, there's the issue that today, right now, I have only one player network coming in. So how do you see the market growing with other networks potentially coming in?
So I think this is another watershed moment and an experiment without parallel in the world, because here we are moving into, UPI obviously is a well-established payment method, and it's sort of, I would call, the locomotive of payments in India. To this locomotive, we are hitching the entire credit card business now, right? So till now, obviously, you could use credit cards only at places, either you could use it online or you could use it places which have terminals. But the enablement of RuPay on UPI actually helps us. Though we had a Bharat QR solution, which was just launched post demonetization. But unfortunately, the Bharat QR solution, on which both Amex, Visa, MasterCard, and RuPay are actually enabled, failed to scale. So now that, and UPI is far, far more mainstream, we do believe that with RuPay, this thing will scale very fast. Obviously, the industry also has to put in that amount of issuance in the market to make sure that everyone has a plastic or a line of credit on RuPay to use. What we believe is that this will scale very, very fast. We will see issuance picking up very fast, and then we will see transactions at point of sale will scale very fast. And this is actually very good. And from a revenue perspective of the industry, this is very good, because if you can see the normal UPI transactions are very revenue anemic. They do not generate a lot of revenues either for the banks, neither they do it for the payment service and PSPs as well. So I do believe that when a large amount of volume actually shifts to credit, because on credit we'll be able to give reward points on UPI transactions, etc. There's a large amount of customer shift that we foresee that will happen from using their bank accounts to pay through UPI and then to credit cards, which augurs well for the credit cards balance build, as well as the revenue will coming back into the ecosystem, both for the banks as well as for the payment service providers and the payment sort of apps. And this overall will sort of lead to a more healthy, revenue sort of revenue recognizing ecosystem. So, I do believe that it's a fantastic move and a move in the positive direction. But however, I do believe that there should be more competition as well. So I would like to sort of see, Bharat QR also sort of trying to, gain some more currency in the market, wherein, if the other networks also sort of invest behind, again, re-energizing Bharat QR, then we will have a good amount of competition in the market between, the UPI QR format as well as the Bharat QR format. And in the end, the merchants and the consumers will win.
Fair. Now, in terms of credit cards are normally thought about only as a very premium product, right? And on the other side, the way fintechs have operated, they have sort of opened the box of buy now, pay later kind of product as well. And of course, short-term products. So there's a lot of market needs. Now, within this structure, do you see the cards moving towards not so elite, maybe mass segment? Today, we are sending almost 8 crore cards. Do we see 25-30 crores of cards getting issued over next 3 to 5 years as maybe the customer, the issuers migrate to slightly mass market, given that the customer is already aware of it and willing to use it, right? So any thoughts on that?
Yeah, so Samir, most people don't understand. Most people think credit card is a technology product or credit card is a payment product. But the way we look at it, traditionally look at it within banks, is a risk plus payment product combined, right? So we would love to issue more credit cards, but the problem is that we also would love to our money to come back because we have a shareholder return to make. Given given those sort of realities in play, obviously the industry has been slow to sort of accelerate. I understand that there has been a lot of interest from the fintech community in this particular product, and given some of the enabling RBI guidelines over the past couple of months, we believe that this industry will continue to grow and we will see more assisted. I call it assisted issuing. That means banks taking assistance from smart fintechs to sort of turbocharge their issuance process. So we will see more assisted issuing starting to happen. And as more assisted issuing starts to happen, and as we get into more smarter underwriting models, and as people, obviously, a lot of Indians are now actually quite aware of the credit bureaus and the importance of maintaining a clean bureau score. As that sort of snowballs much more, as like sort of OKen and other platforms come alive, the aggregator platform matures. I do believe that over the next 3 to 4 years, the cost of issuance will fall, the cost of digital issuance will fall, and that will lead to massive issuance volumes going forward. Given the fact that video KYC is now a reality, and almost 80% of the cards issued, for example, in one of our programs, come through video KYC, which leads to a much lower cost and a much faster turnaround to customers. So as the entire digital stack matures and as the digital stacks become far more solid from a risk as well as operations perspective, this number will grow. So today we are at about 8 crore, 7.5 crore to 8 crore, touching 8 crore cards. So that number can easily double or probably go about 250, triple in a short period of time, maybe in another 3-4 years time. But risk is our middle name. Let us not forget that. You take the eye of the risk, and then all of us pay a very heavy price.
No, I totally get that. I think we've seen the rise and fall of entities just because of that, right? I think the greed or maybe aggression maybe sometimes causes pain, but I'm sure we have right now a very matured ecosystem where people know where to take risk on, and I'm seeing that involvement even more as we work with both fintech and banking background guys. They're all focused on ensuring that it's a sustainable growth. Maybe the last question from my perspective is that when people try to work with banks, the API and the tech architecture is something which is very crucial. So I think I wanted to hear from you your opinion how the tech can actually be a big enabler. And since you are leading so much of business which is powered by tech, and you spoke about some of the pieces as well. So how do you see the tech platforms evolving, and where is the gap? Where do you think people like Hyperfest can come in and solve for it? Right? What do you see is the pain, and where do you see it all evolving?
See, Samir, when we run cards business, we look at it on three or four main buckets. So obviously, one bucket is a pre-issuance bucket where you acquire the customer and then you onboard the customer into the platform. The next part is the account management platform. The account management platform, obviously, you have a large driving spends, and you have a large portfolio management where you are doing balance build, right? And the last part is obviously the risk management platform or the delinquency management platform. If you look at these four things together, I think the first stack, which is basically the issuance stack or the origination stack, that is quite well developed. right? And you have a lot of activity that has gone into it. The real holy grail is the account management platform, because the account management platform has been traditional domain of very large, mainframe type of software providers, right? Wherein, and these are very, very large complex systems. The fact is that the only thing that I'm worried about, and I tell my team, is that, the billing system of a cards business is the holy grail. You cannot screw it up. You screw it up and you'll spend months and months cleaning it up. So, they're very, what I call, they're very tender systems, right? And you cannot generally touch around them and touch them, in a jiffy. What you need to do is that you need to build around them, right? And building around them, especially on the sort of balance build side or on the usage side. And one of those sort of buzzwords is that try to at the try to give usage offers at the segment of n equal to 1. Try to fine tune the usage offers, because one of the problems that I have with the industry's approach right now is that the way the industry that usage offers is spray and pray, right? You do alliance offers with one large merchant, you say 10% off, and or you say 15% off, and someone who comes and doesn't want to, sort of does not know about it, also gets that offer. There is a large part which obviously comes by positive selection, but there's a large leakage also that happens, right? So if you have to use your marketing monies very judiciously, and if you have to use what I call the financial stimuli, right, to sort of get out a result, both in terms of usage as well as in terms of balance build, you actually have to go to n equal to 1. And this is where, when you want to go to n equal to 1, this is where actually the tech heavy lifting is. And, that is where we have been working for over the last 3-4 years. We have actually put in a couple of systems which is trying to do that. But are we there yet? Yeah, I think we are on that journey, but we are 100% not there yet. So I think that is the area where actually the largest amount of potential lies and the largest amount of ROI for banks lies. And last but not the least, in these days of customer, where we have to be take care of the customers, even if they are going through a difficult situation, especially the customers who fall out of their payment discipline, to make sure that you are gentle with the customer while you are taking the message to the customer to, try to sort of discharge his or her obligations, and you give him or her the tools to make sure that, that obligation comes in as smoothly as possible and as nicely as possible. Those days of where, you could be obnoxious to customers are gone. You cannot do that anymore. So I think overall technology plays a huge role, and technology will play a huge role in digitizing all parts of our business. A business which was very, very traditional and very, very mainframe dependent is now becoming, faster, API driven, and with much more digital interfaces. This is a journey, Samir, and, all the new age platforms, which I call the assisted issuing and the assisted sort of portfolio management platforms, are all welcome. We obviously know that we cannot build and run everything on our own. So we are always in the lookout for the market for people who can give us solutions, smart solutions, cost-effective solutions, and solutions that our customers love. And we are happy to partner with them.
Perfect. Thank you. Thank you, Sudipta. I think that was fast. I think 15 minutes way, I have learned so much, right? I think the best part of organizing the event is I get to hear people like you. So thank you, Sudipta. It was short, but very, very sharp. Thank you. Thank you for joining us.
It's a pleasure. It's always a pleasure to talk to you and your guests. Thank you so much.
Thank you. Thank you. Thank you. So with this, I think we learned from somebody who's been leading the charge in the market. I think now as we transition, I think let's hear from our next panel. For the next panel, we will have our moderator, Ram. Ram will join us from Hyperface. Ram, maybe can I see you there? And maybe Ram, you can quickly take it forward from here, introduce the speakers, and then they can take it forward. So I'm taking my screen off, I'm running away, and I'll be back. But I'm conscious of time. I've given you maybe 2-3 minutes late, but I will come on time and take it back to you, right? Or maybe the next session is yours. Yours will be cut, right? So over to you. Thank you.
All right, Samir. I guess we all live in the age of time crunch, which is in fact how I would like to introduce the topic for the next panel discussion, right? So essentially, what has happened in the past decade is that our attention span globally has come down. We've all become a little impatient thanks to the mobile devices in front of us. we want things instantly, right? Like, I want a credit card today, then I should actually get it in the next 5 minutes or 10 minutes. As Sudipta was saying, now ICICI Bank is issuing cards within 30 seconds, which is just fantastic, right? So given we live in this future of digital and instant gratification and all-time connectivity, how have the rules for issuing credit cards have actually changed, right? Essentially, I'm talking about the change that is coming from the customer side. Of course, we also have changes coming in from the regulatory side as well, and banks' own ambitions, issuers' own ambitions, and technology has also caught up. For instance, we now have form factors such as NFC devices that can be used to make payments with cards pretty much instantly, right? So in this era of customer expectations, which are pretty wild, in the UPI era of everything being instant, and in this digital era where we know a lot more about the customers, right? What has changed, right? Would love to discuss that with this fantastic panel. I would like to invite everyone to introduce. I'll call out the name and then would be great if you can introduce. Let's go first with Arvind. Arvind Butola from AU Small Finance Bank.
Yeah, hi Ram, can you hear me?
Yeah.
Hi Ram, hi everyone. Good evening. I'm Arvind Butola and I head credit card product and portfolio for AU Small Finance Bank. AU Small Finance Bank is the youngest, I would say, and only small finance bank which is issuing credit card today. It's been close to 20 months journey for us. And having said that, I think despite being new, we're trying to build a very tech-focused and customer-centric business as far as our credit card issuance is concerned. So yeah, Ram.
Great. Thanks, Arvind. Would love to invite Sony from South Indian Bank.
Thanks, Ram. Hi, everyone. I'm Sony. I'm the General Manager and Chief Information Officer of South Indian Bank, heading digital and technology. I've been with the bank for the past 2.5 decades and would love to share the thoughts on this topic.
Great. Thanks, Sony. Great to have you here. Would love to invite Sonak from CIBIL to introduce.
Everyone, my name is Shonak. I lead market planning for credit cards and consumer loans for TransUnion CIBIL. Most of my about 20 years of professional experience has been in cards and payments. So this is a topic I'm very passionate about. Thanks for having me in this forum, Samir and Ram.
Great, great. Welcome, Sonak. Hi, Sujay. Nice to see you here. Sujay, could you please introduce yourself?
I think you just did, Ram, but hi, I'm Sujay, and I'm the head of business development for Visa in India. Thank you so much for inviting me to the panel. I think it's a very interesting topic. Credit expansion is, of course, a huge opportunity in this country, as many of us know. So glad to be with this eminent set of panelists to discuss the topic and how we can, get issuance to scale many fold.
Great, great. Welcome, Sujay. We have Tarun Sharma from Kotak Mahindra Bank. Tarun, could you please introduce yourself?
Hi, everybody. Good evening to all of you. Happy to be on the panel. I take care of credit card portfolio product digital and CX in Kotak. I've been here for close to 2 decades now in the same place. Let's see how we kind of navigate this conversation with such nice experienced personalities on the panel. And obviously Ram is there.
Great, great. Welcome, Tarun. Great to have you here. So we have, as Sudipta was saying, risk is one of the most important aspects of credit business, and hence we thought it would be, we cannot have a panel without someone from CIBIL, which essentially provides the safety net for all of us in this business. And of course, the technology protocols, which is essentially the roadmap for Visa, right? And then we have awesome set of bankers who are actually running the business. So let me actually start with Arvind first. AU Small Finance Bank is one of the latest to issuing credit cards. And they've already in place more than 3 lakh cards in the market, right? And would love to understand, Arvind, this is a rapid expansion. You've also recently launched the Lit card, which is a very, very unique take on card benefits. How did you think of launching such a unique card into the market? What's been the response from the customers? Has there been any new learnings for the bank from this product?
So yeah, Ram, I think the small correction, we more than 400,000 cards now, not 300,000. Yeah, but having said, I think Ram, it's a very long story how we've actually gone creating a Lit credit card, but I will try to articulate it very short. I think what we've tried to spend a lot of time in identifying the problem rather than actually finding a solution. Like how do we make our mark in this market where there are only very established player, correct? And when we spend a lot of time in finding the problem, what we've got is the Lit, correct? Because what we've understood from the customer that what they want is kind of everything. They kind of want to a product which can engage them for say 3 to 5 years, correct? Credit card are meant for 3 to 5 years, correct? The life cycle is close to 5 years, and if you do category based product, you can't engage them for the next 3 years with the same category of benefit, correct? So we've identified that. So hence they wanted that flexibility that they change feature as their lifestyle is changing or their life requirement is changing. We've also found that the pricing is the biggest difference in taking up a card, correct? Customer hesitate to pay a price for the credit card, and hence we thought, how can we come up in a product where we only charge customer for his usage and not anything else? So I think talking to the customer, identifying their requirement was basically the idea how we came up with the Lit product. And Lit product, we today give complete flexibility to the customer to choose the feature they want, correct? There is no specific category for the customer. They can actually choose both e-com, offline, online, and there are say 18 or 20 categories or benefits they can choose in the same plastic, same card, and they can always change it. Suppose you choose something now and say next quarter or say next day itself you want something else, you can choose that and you only pay for it. So that's that was the thought process when we came up with this product. And I think we're very satisfied with the response so far today. Lit actually contribute a significant percentage of our sourcing. Along with it, I think we see a very good demand of the customer which is coming online, and we as a bank being on the digital journey from the day one, the focus has been to serve customer digitally, and there we see a lot of traction on this card. And today we actually know the rank order of all the feature in which what the customer want, correct? Whether they want reward or they want cashback or they want the e-com card or they want the lounge card. So we know that because that the feature adoption shows that. So we're happy with the initial response that the customer find it more engaging, which was our objective, that they create the engagement beyond that plastic, give them a very engagement beyond the monthly statement, tell them daily and on daily basis that this is the feature they have, this is the cashback they have earned, or how much they can earn more. So we've done all that. So I think so we're happy or satisfied with the response so far, and they've been learning on daily basis. The customer is actually smart to tell us too many things which we can do on that product. So yeah, Ram.
Great. I think Arvind, one of the key outcomes of, if I heard you correctly, is that you get a pulse of what the customer wants at a very high granular level. Right.
Yeah.
Which is fantastic. Fantastic. I would like to ask Sony a question about their foray into the credit cards. Sony, South Indian Bank has partnered with One Card to launch a product, a unique product proposition. In fact, the model itself is pretty unique, Sony. and the number of cards have also been pretty sizable, right? What do you see as the like? How has the journey been for you in partnering with a fintech like OneCard to launch your card into the market? And what's been like the key takeaways for the bank from this partnership?
Yeah, so as you hinted, as far as the bank is concerned, this is the first card that we are doing on a complete on-book basis. In our 90 plus years of existence, we have had various forays into credit cards, but mostly it was either on the referral side or maybe all variants of referrals primarily without having taking a dip or bite into the portfolio per se. And one of the reasons why we were a little hesitant was because the card business itself was something new to the bank, and we wanted to test the waters before doing anything on a big way. And last year, when we were evaluating our current relationship with some partners, we felt that it's high time that we move on to something different, either on our own or in partnership with somebody who has shown credible performance or platform strength, etc. So our evaluation ended with FPL Technologies, which is prominently known as OneCard, who were just setting up and had a tie-up with one bank at that point of time, and who were looking around for partners. The fact that we knew the founding members also helped a lot. They bring in tons of experience on the credit card business, plus a great technology platform which they had developed on cloud, which meant that the time to market would be very fast. And we were left with creating the guardrails for integration with our current systems, plus the underwriting logic and aligning our underwriting policies with what they could offer. And then within a matter of almost 3 to 4 months, we were ready from a tech and business side for a launch. So we started off by offering this on a pre-qualified basis, which gave us a good feedback in terms of the usage of the card, the feel of the card. It's a metal card also, so the physical aspect is also something which is different. The entire journey that was designed was completely paperless, fully digital, and the idea was that we should be able to say yes or no within minutes, and then that will be followed by a full-fledged KYC also immediately. So the whole process was digital. The second biggest thing was to see how the customers would start using it. So that was also the first few months were very encouraging. So from pre-qualified, there was of course a closed user group kind of arrangement also done within the staff. Then we moved on to a secured card, which was the next step in the process against deposits. And finally, we hit new to bank. So today, in a matter of almost less than a year, we have hit around 175,000 cards. That's on building the book, but plus the fact that we are right up there in terms of the card spends per month, the number of transactions that the customer does per month, and even from the business basis also, we have moved up almost 10 to 15 notches from where we were almost non-existent last year. So I think it has been a fantastic journey that we have been able to partner with the fintech and to our customers. And the fact that the usage from the customers is also something which is very promising is giving us the confidence that this is the right model to go forward. And we still see a huge potential for growth, not only for NTB, but also for the existing to bank customers, because that is also a much a rich source of data and potential that we have there. We are planning to ramp up, and we are also now starting to look at other variants like personal loan, etc., through the same kind of arrangements. And at some point, we will also be looking at alternate fintechs who can come and offer something very similar to what we have proven to be successful in the past. My takeaway is, for a bank like ours, which has started a little late, this looks like a great model to go, where there are no bells and whistles attached or no strings attached. We are looking at a player who is very strong technologically, who can do the program management. And after the new guidelines, we have also done the restructuring that is needed. And then ramp it up to a scale where we believe it will break even and start giving us benefits. So it's been a fantastic story on that ground till now.
Great, Sony. I think this is going to sound like music to the ears of fintech companies over here. And I also love the fact that you said faster GTM was achieved due to your partner being fully cloud-based system. instead of a data center or an mainframe-based system, which is fantastic. Just one follow-up question, Sony, there. Do you see any significant difference in terms of the activation numbers, given that the user is completely digitally onboarded versus physically onboarded customers? Do you see any tangible difference there at all?
Yes, there is. In fact, I was hinting at the number of transactions that is done in a month, which is very high. The activation percentages is also quite high when compared to the other alternate mode, because the customer is presented with a virtual card immediately, which he can start using, and then the physical one follows very soon. And that has also helped. And the fact that it is also backed by some great reward programs and great user interface through the app, etc., is also something that is actually rendering a better customer experience and activation.
Got it. Great. Now I'd love for Sonak to come in. Sonak, the question is, see, the overall credit ecosystem is now expanding. Fintechs have made the credit easier to avail through partnerships with the banks and through their very innovative marketing campaigns. They have kind of lifted the stigma that comes to taking a loan. Now, how do you think the customers are evolving in this kind of an atmosphere, right? And how do you think this is going to change the landscape of credit cards, given this kind of rapid adoption, right? Where do you see this going, Sonak?
Yeah, absolutely, Ram. So fintechs positioned credit as another convenient way of paying, versus taking a loan, with credit being available at checkout, be it in physical stores or online. So that easy availability has to some extent helped break the hesitation or stigma, as you said, Ram, of opting for credit. Now, what's interesting though is that this has not dented credit cards growth in India. We did a study on BNPL financing earlier this year and found that taking a BNPL doesn't cause any significant attrition or drop in spends among consumers who already held a credit card. Of course, BNPL was also offered to NTC and new to credit and near prime consumers, or those with a slightly lower credit score, those who didn't have a credit card. But even among that segment, BNPL take up and repayment often helped them graduate their credit scores, and some of these customers later applied for a credit card. So if you ask me, there is a healthy interplay at work here, with limited cannibalization. The primary reason for that is we have a big credit card penetration runway still available in the country. At about 5%, only about 5% of adults have a credit card here. So all said and done, if used responsibly, a credit card can still be a great product for payments consolidation. Now, the other thing here is, remember, some consumers opted for fintech loans or BNPL because of underwriting innovation done by these fintechs, with merchant data, for example. But others also applied for ease of process, for application journeys integrated into their purchase journeys. In the last 3 years, and Sudipta also alluded to it, most credit card issuers have revamped their application journeys, with video KYC, application form pre-fill, automated fraud checks, verification waivers, seamless onboarding. Some co-brands have also partnered banks in this user journey innovation. So over time, that ease of applying of the CX gap has to some extent come down, right? Of course, for internal to bank customers, the example Sudipta gave was very relevant, which is, some banks are now pre-approving customers so that in a matter of seconds or minutes, they can actually have a digital card issued for them. So that's a different experience level. Now, card issuers also understand that they can do more on the underwriting innovation front, to your point. So we see strong interest among issuers to card on the new to credit segment, not only based on traditional internal liability-based scoring, but also based on newer new to credit scores and attributes based on both credit bureau data and alternate data. Similarly, there's been a return of appetite to issue lower limit cards to lower income and marginal risk segments. So these are helping grow that cards in force base numbers we spoke about at the beginning of the call. So in this context, one metric we track, for example, other than new to credit, is new to product, or new to credit cards in this case. And the new to credit card contribution in card origination has actually seen a healthy rise in the last 2 years, which means more new consumers are getting carded now, instead of multi-carding on the existing carded base. That's a welcome change. So by and large, the narrative has changed from concern on whether BNPL is eating into the credit cards growth story to card issuers simplifying their CX and onboarding policies and processes. And today, consumers having a great variety of choices in checkout financing. One last point, we have spoken about the consumer segment so far, but outside of the consumer segment, innovations in the merchant and MSME segment will also democratize credit cards for micro enterprises. So working capital requirements of small traders can be met with a credit card, for example. And with maturing credit data on the MSME segment, carding will become easier. Now, additionally, there is also availability of alternate data like banking, GST, and invoice information, which will be accessible more easily going forward via account aggregators or otherwise. That will help speed up carding and short-term financing on the 70 million odd MSME base. I'll probably end by saying that banks and lenders have also made it easier for consumers to monitor their credit scores, and there are credit risk policy guardrails to ensure easier availability of credit doesn't lead to loan stacking or over leveraging among consumers. So with that, I'll hand it back to you, Ram.
Okay, thanks, Sonak. I think there were some very interesting points. You mentioned that for SMEs, it's going to be pretty useful now that we have more data about SMEs. You know, earlier, I think a decade ago, the most difficult part was about distribution. Right? Today, if you look at fintech companies like Khatabook, right, they have actually cracked distribution, and distribution has become a commodity. Today, the challenge is now actually in the credit ecosystem, which is about, you know, can we extend credit to SME companies, right? And just one follow-up question there, Sonak, do you see the total credit limit coming down per credit card that is being issued, right? So essentially, let's say, you know, as the per capita of the country increases, right, more and more customers become eligible. But for the banks, for the economics to work for banks, there has to be a certain threshold of credit limit which should make sense, right? Like today we cannot issue profitably a 5,000 rupee credit limit card. Do you see the credit limits overall across these new issuances tapering down, or are they remaining constant?
So Ram, for that, you know, big dream to be realized, for us to get the next 100 million or 200 million cards, that needs to happen. And, you know, the only way that can happen is what Sudipto spoke about earlier, which is the unit costs need to come down. The cost of operations, cost of underwriting, cost of digital collections, you know, make customers do more self-help, self-service. When that happens, you know, that's when cards will really take on the other form factors. We talked about BNPL earlier. We are already seeing that happen to a small extent. Average limits have come down for some major players. I spoke about that. But to happen, and UPI and credit is probably going to be another enabler. That opens up a new segment altogether by expanding acceptance. So yeah, I'm confident that will happen over time, Ram.
Okay, great. Now, would love to ask Sujay. Sujay, you have a fantastic vantage point to the ecosystem, right? And I'm pretty sure you're tracking a lot of contributing factors. The ecosystem has changed dramatically in the past decade, right? What do you see as the top 3-4 factors that are contributing in this credit ecosystem to help expand it? And subsequently, would love to understand, you know, the role of Visa as well, right, in terms of bringing out that technology form factor, simplifying it for customers, right? How is that? Would love to cover that as well.
Sure. No, thanks, Ram. Let me address the first question initially. So I think there are certain fundamentals that are driving this belief that there's large credit expansion opportunity, right? I mean, at a macro level, India is supposed to be the third largest economy by 2030. So there is rising GDP growth and GDP per capita growth. There's, of course, the huge digitization scale up that has happened on the back of the public infrastructure that has been set up, as well as penetration of internet and mobile phone penetration, et cetera, with 3G becoming 4G and now 5G, that will only improve, right? So there is a large macro plus infrastructure play, which is the bedrock, I think, of digital payments overall, and hence card payments in particular, and perhaps credit specifically. I think what's also happened is that, you know, while I know this panel is about issuance, one has to realize that issuance is just one side of the credit card coin, right? One of the reasons why credit cards were considered elite products is also because there really wasn't too much acceptance till a few years ago. So if you only have acceptance in the tier 1 cities, by definition, you will always look at, you know, acquiring customers from that particular geography who are relatively more affluent than those in, say, tier 2, tier 3 cities. Also, if the costs of acquisition are very, very high, you will necessarily need to acquire someone whose incomes are large enough to justify what you just said, a limit large enough to drive usage and eventual economics. And finally, of course, you will look at segments that are more, I guess, risk friendly, so to speak. So all those three combine into, or have combined in the past, into making credit cards a neat product. Over and above the economic growth and the infrastructure growth, I think what we've seen in Visa over the last 2 or 3 years, even during COVID, is that issuers in particular have become much more flexible and open to experimenting and testing out different models, be they credit acquisition models or fully digitally assisted, leveraging co-brand partnerships, leveraging the BIN sponsorship model, etc. Looking at new CVPs, so moving away from just the standard rewards, cashback miles, to what Arvind spoke about, giving customers the flexibility to pick and choose their benefits from one cycle to the next, or looking at one-click payments. So Visa has a product called Visa Safe Click, which enables one-click payments and hence removes friction in the e-com space, or even things which are typically considered back-end, but automation of dispute management. All of these things have helped, I guess, improve either the cost of acquisition or the cost of operating a credit card business, and hence allowed issuers to take a more liberal view of extending credit. Finally, I think there's also a plethora of economic models now that are being tested out. So Shaunak talked about, of course, BNPL as an alternative to credit cards thus far, but the openness to give slightly lower limit cards, playing around with APRs, playing around with the interest-free periods, that all of these have made economics that much more, I guess, supple when it comes to putting out a credit card business. And on the back of all of this is, of course, the massive investments that have been made by issuers, by fintechs, by processors in improving their technology stacks, either building it themselves or partnering. So whether it's onboarding, whether it's whether it's customer engagement, whether it's risk management, a lot of those things have come into play. So I guess these are the 3 or 4 fundamental pillars that we believe are driving both the demand as well as the supply of credit cards, as it were. And this will only go to the next level once some of the new frameworks, whether it is the Open framework or the account aggregator framework, and even as acceptance scales, will convert this opportunity into reality. Sorry, to your other question on how Visa is helping. So, a lot of people confuse Visa as a credit card company. We are not. We are the world's largest card payments network, and also India's largest card payment network by payment volume. So we acknowledge that we have a very significant role to play. In fact, we are privileged to play that role in converting this credit expansion opportunity into reality. And our role has many parts. So fundamentally, it is to ensure that our partners, which is typically issuers, acquirers, processors, increasingly fintechs, etc., have access to an always-on, supremely reliable and resilient, secure network that they and their end consumers can access 24/7. The second, of course, is leveraging our brand, our global reach, and the over 6 decades of experience that we have, and the wealth of data that flows through our network to bring the best global practices to India, right? Whether it's in terms of product design, whether it's portfolio management, whether it's risk, technology, advisory services, etc. And if you allow me to take a couple of examples. So, given the data flowing through our network, and of course we see it at an industry level, we have a lot of insight which can help our issuing partners to optimize their portfolios and drive further return on the investments that they're making. So whether it's activation, whether it's engagement, whether it's segmentation, whether it's creating personas, to the point Sudipta made earlier about working towards a hyper personalized engagement model for a segment of one. There's a lot of work that Visa is doing through its analytics teams and can provide as support to our issuing partners. I mean, very relevant from contextual. Visa is the global sponsor for FIFA. A lot of you would have seen the matches. We have a lot of Visa branding. We have the Visa Math Center, etc., etc. So being able to bring those global assets to our issuers that can drive spend and salience of both Visa as well as the issuing partner is another advantage. We have a bunch of risk management solutions that we built which help to mitigate the risk of fraud and also help our issuers underwrite better. And then, of course, we have other solutions, including CyberSource, our payment gateway, which provides both transaction processing services as well as risk management for the seller side. Apart from this basic fundamental stuff, I think what Visa brings to the table is solutions that are kind of fit for purpose and designed for India. So over the last many years, so everything from EMV, chip and pin to risk, to address the risk of fraud in the face-to-face environment, Bharat QR was largely built on mVisa specs, and as Sudipta said, while it hasn't scaled to the extent in its first avatar, there are initiatives afoot to sort of reinvest and make it a potentially larger competitor to the existing UPI network, right? Tokenization, which is extremely important to drive secure payments on e-com, both card on file and device based. Other ways of removing friction. I talked about Visa SafeClick, which was a one-click payments platform, 3DS 2.0, which kind of enables risk-based authentication to evolve. What else does Visa do? So Visa is the glue that kind of binds the issuer and the seller side of the ecosystem. So co-brands, for example, are a great example of Visa bringing together the merchants and the issuers to help them unlock value. We keep an eye out for new use cases and categories for driving credit. So rent payments on card, for example, or supply chain finance on card. And finally, of course, fostering innovation, whether it is through participation in the RBI sandbox or running our own proprietary initiatives like the Visa Everywhere initiative, which was an outreach program we ran a few years ago. We got over 400 applications from fintechs to address some very fundamental problems in the ecosystem, including digital onboarding, underwriting of SMEs, etc. at that point in time. So I don't know, long-winded answer, but basically, yes, a quick snapshot of, I guess, the value that Visa adds to the entire ecosystem.
Absolutely. I think that reinforcing the confidence in the minds of the customers that, look, you are in safe hands is very important for the expansion of the credit ecosystem. Thank you, Sujay. I would love to come to Tarun now. In fact, one of the points that Sujay said that issuers have now become far more open and flexible. In fact, Kotak Bank has increased the issuance in recent years, right? The numbers actually show that. Tarun, what led to this? Can you talk about the top 3 factors that contributed to this increase in issuance and increase in market share for Kotak Bank? Also, another curious thing, Kotak has launched a secured credit card called Dream Different. What was the motivation for launching this card? And again, my question on this one is like, what do you see as the future of this?
Sure. First of all, the belief that if you look at 1 billion cards which are in the market, 8% are credit cards, and their 30% spend total from cards come from credit cards. So that's a kind of ecosystem which is running today. And we saw that out of this kind of a ecosystem, the growth is still intact. We are growing CAGR of 20%. We picked up 3 critical aspects of running this business and expanding it. Today, with a 5.7% market share, we have grown 166 bps in last 1 year. So clocking almost 12-13% of the new cards which are issued in the market are issued by Kotak. We first went with the complete drastic shift in our approach towards risk. We introduced scorecards, various cohorts, and coded it in BREs, business rule engines, so that it can be digitized. That was the first move we did. We created digital journeys for assisted as well as unassisted environments where our sales team can reach the customer, talk to them, and issue cards. But also then when, let's say, pick up any avenue where you meet a customer who is not existing customer of the bank, the cost of acquisition is very high if you go on the ground. But if you give a decision immediately and you do a biometric KYC, suddenly the equation changes. So we introduce these kind of things, doing a real-time decision, running BREs, doing video KYC or a biometric KYC, and issuing virtual cards in the journey. So reducing the cost of acquisition, extending it across. Today, all the salespeople, the complete fleet on street in Kotak is capable of issuing or picking up an application from a customer and issuing a credit card to the customer. So that's what has kind of helped us grow from where we were to where we stand today. Coming to secured cards, Sujay talked about credit expansion. While if you talk about just creating scorecards on existing database, we have some footprint thanks to CIBIL that we have a good safety net out there. But there's still a lot of customers who are not on, let's say, the CIBIL or they have not started using credit card or any kind of a credit instrument as such. We said, let them help build their credit kind of footprint. And we created a fully digital journey for secured card. Today we issue, within that journey, we issue a virtual card. So practically you can say that I have an FD or I do not have an FD. But you can come in real time, we create FD, we lean market, we issue a virtual card to the customer, and you can start using it. Let's say currently market has credit card, 60% spends are happening online. So if you're in a virtual card issued immediately, you can start using it as soon as you have it. So that's the power of digital, that you can create a very good safety net of all the risk elements you have. If I do it physically, as compared to digitally, I'll have a lot of elements where I can go wrong. Digitally, I can create very good guardrails to ensure that we do not go wrong and control remains within the system. So that's where we are on both the expansion side you talked about and on the secured. We are very serious about kind of growing in this market because we see it. Look at the ecosystem today. You have a regulator which is allowing a lot of innovation in the market to an extent that there's a cell which talks to fintechs also. You have issuers who are kind of catching up really, really fast, and you have fintechs who are creating experiences which in a credit card industry, which is like set up for so many years, did not actually come up in that sense. And you have networks like Visa bringing all these people together and saying, let's work. It's not a forced collaboration. It's a very swift move which happened that all the market players today in credit card industry are working together. I think that's the beauty of this whole ecosystem today. And we want to participate in that to best of our capabilities. And that's what you see in the market today. Yeah.
Got it. Yes, Tarun. Yes, as the credit market expands, I think this gives opportunity for everyone. Samir, do we have any time to take any questions at all?
Yeah, maybe we will take one question at best, and Ram, that will eat into your time. Okay, I know that, but I'm you, right? So I came more as a buzzer than actually adding value to it. So, but I'm there, so I'll keep it question. So, what do you take your question, please?
Sure, awesome. So we'll take one question that I'm seeing pretty recently here in this Q&A. See, how are we weighing the risk reward to the business scalability toward penetrating into the deeper geographies, right? Essentially, this is the metro, non-metro, tier 3, tier 4, tier 5. Are we looking at, is the expansion predominantly coming from there? Will the expansion come without that segment? If I were to rephrase that question, right? Would love any of you to come in and answer that question. Arvind, Tarun, any of you would love to take on that question?
Ram, I missed that question. Can you repeat that? Or
Yeah, the question is...
Yeah, please go ahead.
No, yeah, I said something. If Arvind heard it, you can go ahead.
Yeah. So Ram, I think it's an interesting question, but I think I can add a little on this because our journey shows sense of this because we've actually focused on tier 2, tier 3 market and say a lot of new to credit card customer also, correct? And And the way we see it, these customers are actually on the behavior side, they're not different from the tier 1 or say metro customer. I think whole credit goes to the acceptance in all these markets. The e-com acceptance in these markets actually help us to create the engagement with the customer, in the sense their transactions, they're buying through e-commerce. So the acceptance is not an issue. So I think so far, because our book is new, the customer, we haven't seen the full life cycle, but the initial feedback which we see is encouraging, in the sense the customer in the tier 2, 3, tier 4 also are equally engaged with the product in terms of the number of transactions. The spend we see is a healthy spends coming from there, and they're not hesitant to even use products like one-click payment, which Sujay has mentioned in this, and even making the contactless payment. So it's so I think technology or the digital has actually made it simpler. Now every customer who's taking credit card, they inform customer, they know if they don't make the payment on time, how it will impact their bureau score. So I think that education has equipped customer across tier 1, tier 2, tier 3, tier 4 to understand that credit card is a wonderful product if they use it within the framework, and we seeing an encouraging response from the customer. Yeah.
Okay, that's interesting. I think the awareness of credit score in itself could actually bring down the risk significantly. Sujay, do you think it's a good idea for the regulator and the card networks to just, similar to the ANFI advertisements that we see for mutual funds, right? Do you think it's a good idea for us to advertise that, look, your credit score will get impacted if you don't repay your credit card bill? It's a general awareness kind of a campaign. I guess that could actually help towards the expansion agenda, the credit expansion agenda. Sorry, Sujay, you're on mute.
Sorry, my bad. I think yes, that is important. But if there is this belief that credit cards are a bad product with hidden charges, with where if you take a card and spend, you lose your shirt, etc. I think it's important for us to change that image. To be honest, I think there's somewhat of a hover around that. And it may not be as big an issue as we believe it, because in these same markets, and maybe Shauna can bear me out, there is a demand for credit clearly, right? Whether it's consumer durable loans or two-wheeler loans or even tractor loans, etc., tier 2, tier 3, tier 4 markets, there is no dearth of people taking loans and paying them back, either through formal means or through informal. So the fact that people understand how loans work, we need to bring awareness of how cards work, because people perhaps don't have an understanding of how limits work, right? They have an understanding how term loans work. And hence the EMI bit, which is similar to the SIP bit on mutual funds, is well understood. Every month, I have to pay this amount, right? But this thing on credit cards where, you can pay 5% and then, you don't need to pay it fully. I think that's the bit which needs to be addressed. Also, the fact that it's an extremely secure way of paying between the regulator's own stance and guidelines and the infrastructure and the checks and balances that both issuers and networks have put in place. It's a very, very sound way of making a payment, right? Is the other thing to communicate.
Sorry, thanks, Sujay. On that note, we'll bring this to a wrap. Over to you, Samir.
I think I think this is fabulous, Sachin. I was just chatting with my team that maybe these are the things which we have to convert maybe into a document and write, because so much of insights come, and on credit card we hardly get to hear anything, right? I mean, if we were searching for content out there, other than some statistics which RBI does, and everybody makes an explosion around that, beyond that there's no insight, right? I mean, so this is crucial, and I think this is only a beginning for us to build like that. I think we'll continue to do more work. I think these sessions are useful, so we'll at least try to convert this into some text so that can follow up now. So I think this is good. Thank you everyone for joining us, and you can continue to be here. I think we will have next speaker coming up, but next speaker incidentally is Ram, you yourself. I think maybe you have eaten on a bit of a time of yourself, right? So you can adjust with Aishwarya and the next panelist, but maybe you have 5 minutes to quickly talk about your platform on Hyperface, what it is, and how a new age tech stack is built and what architecture is there. So that's over to you. I'm getting back and I'll be back in few minutes.
Absolutely. Thank you, Samir. I'll keep this very, very short. We see, I think we've come a long way. Credit card has been a pretty old product. You can see the first card that's issued in the year 1978 and how the acceptance mechanism used to work. And we've come very, very far in that journey, right? Today, everything has become digital and we have we have mobile devices which have become the primary mode of access or even for a credit card, right? So in that regard, change is the only constant. Now, in this era of instant gratification, customers wanting everything to be available to them, and also, we have a fantastic product like Sudipta was talking about UPI being the locomotive of payments. It's instant, right? And that is the experience that we want. To that end, I'm going to outline basically working backwards from the customer experience side, right? Customer demands. What does it actually mean to have a very modern stack in terms of credit cards, right? Number one, the first and foremost requirement is that cards have to be issued real time. Like Sudipta said, 30 seconds is all it should take for the customer to be able to get the card in their hands and be able to use that as well, right? So the issuance has to become instant, rendering has to become instant, usage has to become instant, right? And once the usage, at the point of usage, the transactions would have to show in real time, right? A pretty, very, very simple thing here on the left-hand side, you can see an illustration which says that you just did a transaction 2 minutes ago. Right, you got the cashback 2 minutes ago for the transaction that you just conducted, right? So this particular information has to be given real time to the customers, right? Today, for whatever reasons, the current stats, the way things work, it's been T+1, T+2 is when it gets rendered onto the customer's device. But a typical customer doesn't differentiate between, say, a debit card versus a UPI versus a credit card, right? I'm making a payment. I want to be able to see that instantly in my mobile device, especially given the fact that almost every user is now having internet and connectivity through mobile, right? So this is a very, very basic requirement. And we fall short here in majority of the card implementations today. Number two is a credit card as a product is very engaging, right? Customers want to be engaged with this product, right? We do things like, hey, you have two launch access for this quarter, 4 launch access for this quarter. You spend 10,000 rupees and then you will get a ticket to a cinema. You spend 1 lakh rupees, you'll get a ticket, a flight ticket, a premium economy ticket, right? Now, all of these are today, this will have to be presented to customers as information in terms of where the customers are with regards to their rewards and cashbacks. And rewards and cashbacks are number one reason why customers actually are taking credit card today. Of course, subsequently, the number two reason is credit in itself, but the number one reason is engagement, right? And today, when it comes to engagement, there are again a lot of reasons as to why we are not able to give that kind of experience, but we cannot give these excuses to customers, right? As customers, they demand that these experiences be given to them, right? So the engagement is the second lever, which requires a lot more technology implementations in terms of being able to show aggregates in real time and redemptions in real time. All of that needs to happen instantly, right? We can't say that, look, as soon as you do 10,000 rupee worth transactions, it will take us 7 more days for you to receive the voucher, the movie voucher, or another 10 more days for you to actually get the flight ticket, right? That cannot happen. Customers do expect these things to happen instantly. Right. Number 3 is the personalization, right? Most of the personalization, if you see today, it perhaps stops at a segment level. But in our experience, what we've seen is that even segment level personalization is not offered to customers. Like we show the same kind of, particularly talking about offers, while this is not only relevant to offers, right? Say when when a person who is in their early 20s logs into seeing their credit card or their banking interface versus a person that is married in their 40s versus a person in their 50s, we show the same experience to all these customers, right? But this has to be changed. The stacks, the modern credit card stack should actually have the ability to create these segments and be able to create experiences for different segments, right? And taking it one level above, we should be able to do hyper personalization. When I log into my credit card screen versus a Samir logging in versus an Aishwarya logging in, we all should see different things. Today, we all see different things when we log into Amazon, right? And it has to be as personalized as that, right? So what does this requires? This requires investment into directly into the credit card system, the ability to do segmentation and the ability to create rules for doing hyper personalization. Number four, and we like Sujay was saying today, co-brand is a primary focus and it's become a very significant acquisition channel for most of the issuers, right? But today the co-brands, the way we're still conducting the co-brands the way we used to conduct 10, 15 years ago, which is for instance, we used to have Indian Oil co-brand and the HPCL co-brand. These co-brands do not have immersive experiences, right? But in the digital age, when let's say a Swiggy co-brand is coming up or a Zomato co-brand is given, the experience would have to be end-to-end digital, right? For the customer, it is a very contextual journey. They are starting their journey from Zomato or from their co-brand app. And from there, they are actually accessing their credit cards, right? The expectation is that that credit card be very closely linked to the experience that the customer desires in their co-brand app, right? And to that end, we need embeddability into the credit card product. It needs to be done in a very safe way, which actually puts the onus on the credit card system to be able to assume that, hey, look, this is a digital co-brand, and we want this kind of experience to be surfaced to customers inside the co-brand app, right? That can have various shades of gray, but it has to be fully embeddable and it has to be done so in a very safe manner. And this is what we in tech parlance, we call that co-brand as a first class primitive in the stack must be there. This is the approach that we are taking to building our own stack. We are making these first class primitives, essentially trying to offer to brands out there the ability to build an Apple credit card like product without having to invest enormous amount of money and effort into technology and be able to launch these very quickly into the market. And if you look at everything that I talked about, this is all these are applicable to banks' own interfaces as well. As the percentage of customers using mobile banking increases, these same demands will be placed by banks' own customers as well. So essentially, we are looking at a complete transitionary period where credit cards will not be about the ledgers transactions. They all will have to be there, of course, but beyond that, it has to become an experience-oriented product. And that is a big journey for all of us to make. I'll stop here. Over to you, Samir.
Thank you. Thank you. I think this thought process is critical, right? Because all the while for so many years, we knew that credit cards cannot be built or rebuilt. And that was basically, we were always using the same platform worldwide for so long, right? But India has been an origination of core banking platforms, right? If you look at from a Finacle to a FlexCube, all of them originated in India, but credit cards had not. So good to see this kind of new innovations coming out of India. I think either you or the way our competitors, your competitors, which is M2P or OneCard, all of them are innovating brilliant. I think market is with a lot of new knowledge, new interfaces, and I'm sure customers are really looking forward to that. I think with this, we move to the next segments, and the next segment largely is focused on how do you think about co-branding, right? Co-branding of cards was a crucial element we always heard about, but not at the scale which we see today, right? I think the kind of work which has happened on the e-commerce side, I think that has shown a lot of value. And I was hearing from the market as well that a lot of people don't know about the new market which is opening up. But I heard yesterday, I will not disclose, In my conversation, I heard that 1 million card has been issued by somebody nobody knows about, that they would have that much of card base. And yeah, that's an open secret. That's what I heard. But I will not disclose all of that, because in the market you get to hear a lot of facts which are just can't be shared. So I think with this we move on to the next slide. I think you have a difficult task, Aishwarya, because this panel has a tight schedule. Because after this panel, we will have Shalini Madam joining us primarily from a fireside chat. So from all the audience perspective, this is what we are going ahead. We are going to talk about co-branding cards and hear from the industry leaders. And then we'll go to hear from Shalini Madam's perspective, what's Federal Bank is. So with this, I pause. I take it, hand it over back to you, Aishwarya. You can take it from here. Over to you.
Hi everyone, I'm Aishwarya Jaishankar, co-founder at Hyperface. So like Samir said, and earlier Sudipto mentioned, I was so happy that a leading issuer like ICICI, he took the name of 2 e-com co-brands, right? And that's really has become the power of co-brands. I'm so sorry, guys. We have with us a very mixed panel of both banks and e-com companies. And we also have leaders from banks who moved to fintechs. We'll start with Chitrabhanu, sir, because Federal has been at the forefront on co-brands, even on the liability side. Chitrabhanu, I would love to hear your views on co-branded cards in general, and then maybe we could pass it to Saurabh to give his views as well.
Thanks for the opportunity, Aishwarya. So I've been hearing what Ram was talking about some time back on the interesting propositions that he's looking at in terms of how the co-branded journey should be like. So for us as a bank, we have just started off this entire journey of credit cards maybe only 1 year back. And so one of the mandates that we had as a team was to ensure that our entire credit card journey has to be digital, has to be seamless, without the need for a physical intervention. Because we see all those big banks who were doing it earlier had a legacy issue wherein they were doing all those things physically. But considering what COVID has come subsequently, it was very important that we limit ourselves to ensuring that the entire end-to-end journey happens digitally. So that was one positive trend that we could observe. And in the last 1 year, what we have been doing was end-to-end digital. So there was no physical interventions that was done in this at all. You go into the journey, a customer goes into the journey, and you do it in 3 clicks. But then subsequently now, it's not going to be just the organic cards that we have to do. We may have to have discussions, the point which Aishwarya was also talking about. How do we partner with other with partnerships, etc. So we have 2 kinds of partnerships that we are looking at. One is the fintech partnerships, which helps us in with a much higher level of heavy lifting in terms of co-branded partnerships, wherein they do some part of the sourcing. They also become a part of the interventions in managing the customers, etc. That's something which you have. The relationship that we do with fintech, like the One Cards. One Card is one of the relationship we have been doing. So wherein the underwriting journeys, etc., is something which is managed by the bank, but the customer, what do you call that, experiences is a part of all the skill sets that the fintech brings in. The second part of it is something which we work with, for example, the Amazon ICICI journey, etc., which can be with all those eco partners, etc., wherein it's the sourcing that's done by them and some kind of expectations from them that we provide some additional value adds for these customers. So that's another set of journeys which can have. We are looking at both these sets of journeys parallelly on how we can work with all these e-com and all the other interventions also. Along with it also work with fintechs. So this is something which is adding value to us in terms of getting more customers, providing more value to the system and ensuring that we have more relationship with them and get more new to bank customers. So this is one intervention that Federal Bank is looking at very seriously to build our base. Aishwarya.
That's really interesting, Chitrabhanu, because I think we keep doing this B2B fintech, B2C fintech, and of course, the whole lot of context changes when you talk about embedded finance. So it's interesting that as a new issuer, you're targeting all sets. That's what I'm taking away. I just realized Denny is next. Saurabh, I'm sorry, Denny, I know you're there. I think UPI on credit is something all of us eagerly awaiting. Denny heads UPI product at NPCI. Denny, you are building the coolest products. I mean, UPI today is the biggest platform, and even the RBI governor talks about how it is outside the banks. So when we are talking about UPI on credit and credit cards being enabled on UPI, how do you see this panning out? What to you would the UPI on credit scape look like? Because till date, co-branded cards have been hugely in the domain of banks. Now, how do you see it evolving with a product like credit on UPI and UPI being offered on credit cards, Denny?
Yeah, Aishwarya, thanks for having me here. And just a small correction. So I had RuPay, not UPI. That's Saurabh who heads UPI at
I'm
NPCI.
sorry.
So yeah. So so both me and Saurabh work very closely on this entire credit card on UPI journey. And the day this announcement was made, believe me, Aishwarya, so the life at NPCI has changed totally for both of us and our teams, because this was something which was obviously was an ask from the entire ecosystem to the regulator, and we always thought that it will be allowed as a credit as a form factor, not as a credit card as a form factor, and that came as a surprise, and it was interesting. And obviously the biggest advantage that it brought was that it kind of increased the acceptance from a 7 million POS terminals to a 70 million QR code, right? So that's the benefit, direct benefit that comes with this entire integration. But having said that, when this entire thing came onto us, we sat on the design board and we started looking at it in a very different way. So it was not just kind of making this as an enabler for acceptance alone. We wanted to now use UPI as a platform. And I mean, I heard Ram and Sudipto speaking the same thing, right? Instant issuance, instant onboarding, instant usage, instant reward redemption. And these were the things that we wanted to address with this implementation. We didn't want to merely kind of put this as a process where you are just kind of converting your card onto or linking your card onto the UPI platform and then start using it. So we are looking at as UPI as a platform now, and how do we enable all these activities to our issuers, to our respective ecosystem players. And that's where the excitement is, because not only we want all the benefits that were there and all the features that were there in a physical card form factor to come onto UPI. So we have already started discussing with our partner for accessing the lounge through a QR code, right? So that's something that's coming up. So similarly, we are talking to all the players. How do we kind of take the entire functionality of a BNPL or a EMI onto this platform? And those are the things which would kind of enable the ecosystem, and also all these co-brand partnerships to kind of come out with much more interesting and innovative solutions on this platform, because we will give the platform to the ecosystem, and finally all these innovations will start happening. So we are in for definitely some exciting times, Aishwarya.
Oh, no, awesome. And I'm sure RuPay will be driving some. Coming back on the innovation front, right, Saurabh? Like I said, Saurabh is the banker come fintech person in the panel I've been looking forward to. We all like to say in India, there are many Indias, Saurabh. Like that within cards, right? While a whole lot of stories going to retail cards, corporate cards, the whole set of use cases, the whole universe of what a corporate card can offer is huge, right? And Zaggle has been at the forefront doing corporate cards. And as somebody who's been an industry veteran in credit cards, who's now leading a fintech, and I'm sure there is a corporate credit card story that's being written as we speak. How do you see the space evolving, and what do you think, or How do you look at co-brand, both because you've evaluated it from both tables? So I'm very curious to hear your views.
Sure, that's really interesting, Aishwarya. It's really heartening. In two conversations, I heard about fintechs when it comes to co-brand partnerships. Tarun will vouch for this. Last year, when Tarun and I were having discussion about how do we go about formalizing our co-brand strategy, honest confession, I don't think we ever discussed about having fintech partner as a co-branded partner in this space. And in 1 year time, we are talking about fintechs as co-brand partner. I think that's a big change we are talking already. I'll first answer the co-brand part in general, and then we'll talk about the corporate card piece. I think Ram covered one point beautifully, as he rightly said that most of the co-brand partners in the market today, work almost like what it used to be 15 years back. I think that's a big gap we are discussing here. And reason being, the market is changing very fast. As I said, in last 1 year, if we can think about fintech as co-branded partners here, then obviously the way we are acquiring co-branded partners and consumers in the market, that has to undergo a change, a big change. So couple of gaps, or maybe those gaps are the opportunities what we can discuss in this case. Like why co-brands? And I'm using this word apart from couple of co-brands, and that too the latest ones. Most of the co-brand partners in India have not been very successful. That's a fact. I think there's no harm in calling it out loudly. And the reason being because there are certain very obvious gaps we see. First of all, let's take an example. How do we go about, what's the concept of co-brand card? The whole concept of a co-brand card is that the issuer gets the benefit of the customer base of their retail partner. I think that's the first and the foremost motivation for any issuer for going for a co-brand partner, right? I think that's how it starts. And purely from a partner side, from the retailer side, the whole concept is to get some brand equity and obviously get some additional sales. From a consumer side, obviously, and it is increasingly becoming a phenomena now. From a consumer side, they obviously get a product which is more relevant to them. And it's a world of personalization, hyper-personalization, what Ram was referring to. So obviously it becomes a very, very important thing. If that is the underlying principle of getting into a co-branded partnership, then how do you first acquire the customer itself becomes a very, very important thing. So today what happens is you go and just sign up a co-branded partnership, and then the entire process is disjointed. So there's a bank which has their own acquisition journey, their way of reaching out to customers, and then there are partners. And in most of the cases, the partners don't even have a customer onboarding journey today. And that is where, it is disjointed. And I feel that fintech players can actually play a big role in bridging that gap. So today, a lot of fintech players can help those retail partners to build those journeys, which is seamless with the bank's onboarding journey. I think that's one gap, which I feel is a very, very obvious gap. And that's the reason why most of the co-brand partners are not doing well in India. Second is also, we have to also see whether the co-brand partnership is of equals or not. And many of these co-brand partnerships is tilted towards one partner. And it's in favor of the retailer who's getting into this partnership. And that's the reason why banks are also a little careful, or the issuers are a little careful about issuing too many cards. They don't want to reprice their existing book. If they have to go and reach out to their own set of customers, obviously they would not like to get into a proposition which is more expensive than what they have as their proprietary product. So that is another piece where the partnership needs to be of equals. And that is again, the role of fintech comes into play. Today, most of the fintechs who are getting into co-branded partnership today, talking about a partnership which is almost a P&L sharing kind of thing rather than a revenue sharing. So there is definitely skin in the game when it comes to a partnership like this. And going forward, I think for this to become successful, I think it's important that the partnership should be of equals. Third is, how do you go about rendering these offers on your partner ecosystem? I think that's very, very important because end of the day, it is the partner who's bringing in those customers. The customer is more, if I can use that word, married to the partner rather than the bank or the issuer. So it's very, very important. And I know that there's an overhang, RBI overhang on, what kind of data can be shared and things like that. But if you read the circular properly, I don't see that as a challenge, big challenge. It's just about, how do we go about interpreting all this regulation? But it's very, very important that you create that customer layer on your partner ecosystem. It's extremely important. Otherwise, it will again be a very, very disjointed customer experience. So these are the three areas where I feel are the gaps. and going forward, these are the gaps which will eventually become a trend, and the market will shift more towards this, is my view. Now, the fourth aspect, the first question, what you asked me, Aishwarya, is about the corporate co-brand partnerships. Now, if you simply look at the definition of co-branded cards, everything revolves around the consumer card. The market hasn't seen too many offers or too many, work around the corporate space. I think there is a huge gap in that space. B2B payment itself is a big market, and I don't think there are too many issuers who have taken up that as a project to build that up. And today, those fintechs who are and being on the other side of the ecosystem now, I also didn't realize earlier that this could be such a big potential. So today, let's talk about Zaggle. Zaggle goes out in the market and sells the SaaS solution. Now, through those relationships, the kind of user base we are getting is not funny. Now, if you get into a B2B2C kind of model there, then obviously there's a big scope of getting into a co-branded partnership in this space. So this is going to be more like a three-way kind of partnership where you, on one hand, you have one issuer, then on the other hand, a fintech like ours, who's getting into more of a SaaS solution. And if you embed a credit card product along with it and cover not only the B2B space, also the B2B2C space, it becomes a very, very comprehensive solution in the market. So I think this is one space where I feel the market will evolve. We have started seeing some green shoots in this, but we have a long way to go. And I'm very, very hopeful that we'll do exceedingly well on this space.
No, Saurabh, it's super interesting to hear your views on the broader co-brand space also, considering you've been there, run co-brand programs, and now being on the other side. Because this is an important elephant in the room. I did see a panel question as well on economics for a co-brand, right? Because there is a old a story on, saying, let's harvest together. I'll take the sheep and you take the rice. Or you take the cobs and I'll take the corn. That is not how partnerships will evolve, right? It has to be equal. And when we say equal on the table in the new world, where I'm going with this is, how are you seeing banks evolving here? Because you just explained the thought process maturity that happened in terms of offering technology for co-brand. But in terms of economics, where do you think the thought process is with banks, and where do you see the points to handhold or ensure that it is a partnership on the table, especially for players like you or Five who are bringing in that meaty customer, like Paka Hua. So I would like to hear, I know there are a lot of conversations that must be happening, but just from a broader industry perspective or thought process shift, would love to know what's going on.
No, specifically on the commercial side, I think it's more not on the bank side or the issuer side, it's on the other side of it. They need to understand that if this co-brand needs to be successful, then obviously there has to be skin in the game. On the bank side or the issuer side, bank and issuer, I'm using it exchangeably. Recognizing the fact that these kind of integration is required for enhanced customer experience. That is very, very important. I think that recognition is still not there. I think somewhere, that wall is there that if the experience is outside my ecosystem, then I'm losing my customer. I think that's not the way. I don't think anyone can, hold on to their customer segments or customer base. The world is changing fast and things have commoditized. And I don't think, customer ownership as a concept will survive for long. So it's important that people do realize that the customer experience is first, whether it is rendered on your partner's ecosystem or a bank's ecosystem. It's end of the day, it's customer first. So that recognition needs to change or should evolve on the banking side. The new generation one, those who are entering late into this on the credit card side, they are more receptive. I think it's the larger bank probably they have to make those changes.
No, this is like totally agree with you on this. And also somebody once mentioned, who really owns the customer? In a smartphone where there are 40 apps downloaded, none of us really own the customer. The reels and short videos do not own the customer. The reality is customer attention span is so small and everybody is fighting for it. So the attention span is what we are going after when we say we deliver great experiences. What you mentioned on co-brand being able to engage better, I think that's where co-brands get interesting from a value building perspective as well. Let's hope that thought process improves. Vimal, as somebody who has been building a small credit platform, right? These are all form factors to the customer, right? I might label it a buy now, pay later. I might label it as a credit product on UPI, as Denny said, or I might call it a short-term credit. Early salary has been one of the pioneers of the concept, now five, right? Of course, there was a prepaid model that the regulator has taken away. So how do you see this evolving for players like you? Because there is partnerships on the table with banks. And when we say credit cards, definitely the spectrum of this, what we call as transaction credit, should be included. Tomorrow, if UPI is a form factorless credit, right, there could be a credit card, Denny, but it doesn't necessarily have to be a 16-digit plastic that the customer needs to see, right? It could still be powered by a file. So these are all the modern advancements that technology can make happen. So how is Five looking at it? And as a person who's been the premier in early salary, let's Xerox it now, right? And how have you seen it evolving? And what do you think would be the path ahead for co-brand partnerships or such partnerships in your product?
Sure. Thanks, Aishwarya. So I think so. If you really look at the industry for the credit card side, I think so for last 30-40 years, primarily in last 5 years, I think so the more credit card issuance has been there, but till maybe probably 5 years back, there were less than 2 crore customers having a credit card. And more customers are coming in the young age, aspirational, people, Gen Z and the, millennials, where, again, I think so if I maybe probably I may be harsh from the bank side, but, there is a need for the credit segment for each person, right? Because be it a earning 15,000 rupees or be it a 25,000 rupees, be it a person earning 1 lakh rupees. So today credit card still is treated as a more like a elite segment product only. And that's where I think so we, where we come in is primarily the young aspirational mid-income group is our target audience as of now. So that's where I think so we feel that as of now, we are looking from the cash need perspective, but since these customers also have the transactional needs, right, which are more like a payment or convenience solution. So that is where I think so we feel that, the partnership with the banks, we are looking and we are in advanced discussion with the many banks. But this segment definitely is one which is still maybe probably somewhat neglected by the banks, large banks, and maybe probably the fintechs are looking more from the inclusion perspective for into the credit card segment. So that's what I think. So we are looking more from the customer experience point of view, because at the end of the day, these are very young aspirational Indian. They don't want to wait for 5 days, 10 days to, as I think so many of us have voted, is that, it is very, very instant gratification what the customer need nowadays, right? And that's where I feel personally the, a lot of time this co-branded fintech with the fintech will bring a lot of customers to the banks as well as the more from our point of view as a fintech. I think so we would be able to give best customer experience, best product also being made available to them. So that's how we are looking for.
So this is awesome, Vimal. I do see we have another 9 minutes to go on the panel. So let me add a little masala and I'll throw back your question to Denny. Right, Denny, I think what I hear loud and strong from Vimal is there is definitely a need for sachetized credit or credit card, as we call it. And there is, as you said, this exciting new UPI on credit card coming in, right? How do you think the two can be married, Denny? Any thoughts from RuPay team on this segment of the first to card or the person who wants to start off a starter credit card, so to speak, which could be partnering with all these NBFCs who have already been in the short credit space? Is there any thoughts around that? I mean, feel free to share your views as well.
No, very much, Aishwarya. Actually, so that's what I was trying to explain, right? So UPI will be now used as a platform, and this platform will not only kind of enable the usage, but also the instant issuance. Okay, and that's predominantly to kind of ensure that we are able to provide a sachet credit limit to the user who actually wants it and at the time that he wants it, right? So if you create those APIs, those platforms where, say, if I have to buy and I just need a credit limit of 5,000 or 10,000, and there are issuers on the other side who are willing to kind of underwrite me instantly and provide that, that's something that we want to kind of do it on this platform. And there are multiple interesting use cases. One of the use cases also, and this is not your traditional customers who are currently being underwritten by the issuers, right? These are very different set of customers. And one of the use cases, there is this Ujjwala scheme, which is being run successfully by the government, but there have been almost a good chunk of customers who find that even that 700, 800 rupees, which is there for the refilling of the gas cylinder, as a burden. Okay, and why it is a burden is that because that cylinder actually gets consumed in 3 to 4 months time. So they don't want to kind of block their 800 rupees upfront for the 4 months of usage. So how do we kind of enable this on a UPI platform? And that's something that we are trying to figure out a solution and work with interesting players. So this is the power of UPI we want to kind of bring to both the sides, to the customers as well as to the member banks and the fintechs, obviously, because the fintechs are the guys who are going to kind of propel this entire thing.
This is really interesting. I think there really is exciting times ahead, and across the board, across the segment, we are going to see some interesting use cases. I do see some questions. I think, Saurabh, this is on corporate credit card. I do see a couple of questions. Would you be interested in answering them? You want me to read it out for you? Under the corporate credit card model, underwriting of the end customer or SME is likely to be more complicated or not quite as standardized as in the retail segment. How are fintechs or partners solving for these issues for a bank to be comfortable in extending a credit card product to such customers?
This question is from Kone, if I have pronounced the name correctly, correct? I think
yes.
It's a beautiful question. And honestly, we do discuss about the customer proposition and how do you go about solving those problems. But yeah, the fact of the matter is, this is the first problem to solve. If you really want to get into corporate card space, then how do we go about underwriting these customers is extremely important. I think that's a very, very fair question to ask. The answer ideally should come more from the bank side, but yeah, given my experience on the bank side, what I can say is today you have a lot of alternate data available, and especially when you talk about GST data, which I don't think most of the banks have been using to full effect. That could be a good replacement of how do you go about underwriting these customers. I think the corporate underwriting or the SME underwriting till date is very, very conventional. It's still a very paper-based kind of underwriting. I don't think there are enough and more scorecards that got developed over the period of time. But going forward, I think the way we have a lot of banks have done on the retail side, using GST data or maybe some transaction data, banking data was always available, cash flow data is always available. Using all this, one can build scorecards around this to acquire more and more customers. And somewhere one has to also get out of the comfort of carving out limit from the existing set of wholesale banking customers. If you really want to expand the market, it's important that most of the issuers do explore the market outside the banking system, their banking ecosystem, and acquire more and more new customers in the market. It's a very good question, and it's a very difficult question to answer.
I think we are at the fag end of the panel. Thank you so much, Saurabh, for that. And thanks to all the panelists. I think if I were to sum up the partnership strategy or the co-brand strategy, I think Chitra Bhanu said it really well coming from a bank. The need to have an approach where you say, okay, this is a fintech. The way they'll want to look at this business is different from how a typical e-com would look like. And we did hear from an ecosystem enabler, the sheer size of UPI is mind-boggling, and what we need is a UPI on credit platform that's inclusive, the way Denny was describing it. And when we come to fintech players like Saurabh or Vimal, the ask is pretty clear. We have data, we've been servicing customers, and we can promise superlative experience and customers. Now, the question really is, are banks going to bite it? I really hope we'll have more yes there than no's for the benefit of the larger growth. If India was to get to 80 million to 100 million to 500 million, I think all these partnership-led card programs will play a very critical role. Thanks a lot to the panel, and Samir, we are giving you 2 minutes back as well. Thank you.
I think you gave it 2 minutes in advance, right? Thank you for the panelists for joining, and I think this is a super discussion. As I said, all of it is like something which we want to sort of savor. So we'll convert this into small nuggets. I was telling again my team not just to write, but I think each of these segments should be taken into a sort of proper short videos, because people will learn and follow from each one of you. So thank you for joining, and I think this is a brilliant session. I learned so much out of it, right? So thank you guys. Thank you. So with this, we move to the next segment. I think very crucial for us to again, we heard initially from Sudipta how actually from the market perspective ICICI is scaling and how his thought process. So I think they work at scale and they have sort of grown at almost 3x in 5 years. Amazing stuff. So we wanted to learn from him that portion. Then we understood a fair bit on how new issuers are thinking and how they're scaling up. So that was another segment where we got deep insights, and that segment, I think on its own, actually can be pulled out and taken almost as a case study to the market. Then we obviously heard from Ram a fair bit on how our new age platforms are coming up and how they can actually activate the market as well. And then co-branding is like flavor of the season. We heard right now on how co-branding is actually activating and helping it. So almost 50% of the cards are right now at the industry level are nearly on the co-branded cards, and of course flagship cards and more co-branded cards are coming up. Given that there is a change in the market where prepaids, credit or prepaid is no longer permitted, and also there are a lot of other regulations coming in, we believe that again this segment will explode, and UPI coming on credit and co-branding, I think this together will be either further explosion, right? So I think at this point of time, I think we have to learn again from someone who has been sort of so much helpful to the fintech ecosystem as well. I think from an industry perspective, Shalini has helped a lot of people. I myself actually follow her, and I have been so happy to have her in some of our training session as well. Those sessions, for everybody else would appear that those sessions are taken and my participants are learning from her. Actually, I am learning from her as well, right? So happy to see her here. And I think if I look at the audience still around, typically when we have the webinars, they don't run for that long. I think they are there for listening to you. We almost have 100 people still out there.
Thank you. My pleasure, Samir, to come in and do this session with you. Digital Fifth is somebody we've been quite well associated with for some time now. And credit card is a product which is quite close to my heart, actually.
Thank you, ma'am. So I think one of the critical aspects is that Federal Bank was not in credit card business despite being, so long, it's a long history, right? And still being so established. I think why you took a call now entering into this business, what kind of journey you went through, and sort of what did it take for you to differentiate in the market, right? And at a large level, late entrant and still going multiple ways, right? What differentiates you, and how do you see the business?
Thanks, Amir, and good evening to everybody on the call. So I think from a background perspective, just to get back a little bit in time, as you rightly said, Federal Bank had never been in the complete unsecured space. If you look at it, whether it was credit cards or personal loans, the bank was really very small in that kind of business. The bank had been very much focused on secured assets and obviously on liabilities and business banking and those kind of things. I think it was about a couple of years back while we were looking at, when we were doing a strategic review of the bank, we recognized the fact that a couple of imperatives were there. One, the fact that with secured assets, the return on assets will always be low. and there's an expectation from investors, analysts, shareholders, how do you improve your return on assets? That was one aspect of it that was spreading. The second aspect of it was the market for credit cards was booming. We could make out very clearly that the market for credit cards was booming. The third was the fact that some of the railroads that were required from a risk appetite perspective had improved materially in the market, whether it was data from alternate data, data coming through things like TransUnion CIBIL, Experian, etc., whether it was fraud prevention through Experian Hunter. A lot of the infra that was required for a bank which has a moderate risk appetite had been coming in. And clearly our own customers were asking for a proposition on credit cards. So there was a combination of all this that came together. And that's when we decided that it was imperative for us to get into this business. We started the journey actually, coincidentally right at the beginning of pandemic. It was not meant to be that way, but we started the journey of implementing a credit card solution. And that's probably one thing that stood out for us, because this whole project, before we launched the first card, we took about 9 to 12 months to get all the infrastructure in place. And there were many firsts coming out of that. The first was the fact that the team that worked on it had kind of not seen each other. They were working literally remote, because this was March 2020 to March 2021. So, everybody was remote and we were working on a remote. So that was one first. The other first for the bank was the fact that this was the first proposition where we looked at a third party to do not just the systems front of it, but also the operations front of it. So we tied up with Fiserv, and we took a complete, very different cloud-first outsourcing approach to say that let's put the infrastructure in place to somebody. So that was another first for the bank. Taking all this into account, the bank came up with a proposition, and I think recognizing the fact that we were late in the market, we definitely had to make sure that our proposition had something more attractive than what would be. So a couple of features that we did, and my head of credit cards I can see is on the call, Chitrabhanu. I'm sure you may have covered some of that, but clearly we did differentiate. So we first said that you will get a lower interest rate IRR if you combine your savings account balances with your credit card outstanding. So one of those who offer a materially lower IRR, because we consider the savings account balances also, and therefore the customer has the ability to optimize his interest expense by using the balances in his savings account. The other was we had a differentiated rewards program. We differentiated rewards based on what we call 3-to-1 ratio, which is some products, some spends will have a 3x reward, some will have a 2x, some will have a 1x rewards. But I think the largest kind of proposition for us was we adopted what we call a digital only route. So we probably so far the only bank I would think in the country which doesn't have a physical application form. We don't even have a physical application form. We didn't design a physical application form. Even now we don't have one. And we do it entirely digital, both for existing to bank customers, and we've just started the journey for new to bank customers. We do it entirely digital. It's delivered on the mobile as a virtual card, and you can start using it literally from instantly. You can apply for it, get the card and start using it immediately. The physical plastic follows in due course. So that was a completely differentiated proposition. So, these aspects helped us to kind of get into the business, and a couple of other features. The plastic looks very nice, looks very different, all of that stuff we did. But I think these helped us. Having said that, I must admit that we are still extremely new in the business. This is a very exciting business for the bank and for all of us. And we're clearly here to scale it up and work with partners and organically to scale it up, Samir. But that's kind of the journey we have on credit cards.
The fact that you don't have physical paper itself is like astounding, right? I think there's so much of love for paper generically, right? So I think this is brilliant.
So yeah, it's both environmentally friendly as well as completely digital in that nature, So that's why we positioned it that way. We are very determined that we will not have a physical application form.
No, I agree. This is a good start. I think this is what the market should also sort of learn, right? Now, you also, while you went on your own card, you also partnered with OneCard, right? So, and this is like interesting move. So what made you to partner with the ecosystem? Because then you are open for fintech partnership, and generally also you have worked with so many fintechs, right? So what made you open up to that kind of framework, and how it is helping the bank?
I'll first talk about our fintech philosophy because that's the only way I can lead into why we do FPL One Card. So as you rightly said, I think in the introduction also, Federal Bank does a lot of work with fintechs. So about 4 years back, we got into a fairly detailed strategic review with our board. And one of the tenets we kind of identified with the board was that going forward into the future, we would like the concept to be what we call branch light, distribution heavy. What we really meant was that we would have branches, but we would keep them at a very low level. So, the history was till about 2012 or so, 2014 or so, the bank had expanded physical distribution extensively. We had grown from about 600 branches to about 1,200 branches, primarily because we wanted a national presence, etc. And we had grown out of Kerala into the whole of India. So that phase was over. We took stock and said, now is the time for us to say we have sufficient branches. We'll focus on those branches from a productivity standpoint, etc. But this is now the time to look at what we call alternate channels of distribution. So we invested in relationship managers, business correspondents, etc. But it was at that time that the fintech kind of ecosystem was coming to life in India. And we said there is a strong proposition that Federal Bank can offer to fintechs by becoming a preferred collaborator with fintechs. We did not see fintechs as competitors. Even today, we don't see them as competitors. We do believe that this ecosystem needs banks, needs fintechs, and there is huge merit in collaboration with fintechs. So we then invested in an API banking gateway. We actually put in the infrastructure that was required for the gateway. We built a lot of APIs. And initially, I must admit, we built the APIs without knowing what we would use it for. So it was like, my IT team was building those APIs and keeping them ready and saying, yes, there will be use cases that will come. Over the period, then we started, partners. We approached partners, partners approached us. And then today, as we speak, we've got about 300 APIs. We work with about 50 fintech partners. If anybody goes and looks at our investor pack that goes out once a quarter on our website, when we declare our quarterly results, you'll see quite a complete section devoted to fintech partners actually in that. So that was the journey as to why fintechs became important. They are a completely independent unit in the bank, Samir. The way we structure the organization is I have a team of people doing what we call the organic business, and I have another team of people doing the fintech business. Both of them carry balance sheet targets. Both of them carry P&L targets. They sometimes have to compete with each other, but that is really to optimize what is in the market. So that was the journey from a fintech standpoint. Specific to credit cards, clearly in that same philosophy, partners and us was such that we were looking for, again, alternate channels of distribution and how to reach it. And we wanted partners who had the same philosophy like us, like a digital philosophy, a philosophy of risk appetite, which was reasonably moderate. We are not aggressive from a risk standpoint as a bank. So we wanted those partners, and that's how the partnership with FPL Technologies came. Today, it is a significant partner for us, and we are working with a few others also that you will hear of in the coming quarters. But FPL is significant, gives us distribution, gives us access to a very different profile of we normally would not have access to, because I think the Federal brand has a certain association. It has an association with more the self-employed, medium enterprises, owner of an enterprise kind of thing, as well as the non-resident Indian customer. The FPL one gives us access to the salaried millennial, the Gen X, born with a mobile in his or her hand kind of profile. So very different profiles, very different things. And we believe that the organic card will do its bit, the partners will do their bit, and the bank will therefore gain from the thing, and the ecosystem will gain from that. So that's how we have this. And it's not just on credit cards. We have partnerships on personal loans. We have partnerships on savings account. We have partnership on gold loans. We have partnership on microfinance. All of them we do fintechs, and we do our organic business. And we believe that collaboration makes a big difference to the customer.
I think the structure you have built is a role model for everybody else to sort of pick up. It's a case study, right? So how we move from maybe not too much into this business to lead the business, right? And with the P&L. So we always believe that P&Ls can be built in the partnership structure a lot, right? So
absolutely.
Great case study.
Yeah. Yeah.
So I think coming back to the another aspect, everybody's talking about UPI and credit card, right? What exactly will happen around that? So I mean, another portion is that credit card always has this problem that they were only used in some use cases where amounts were large and you need to have a device. So acceptance was always a challenge. Now acceptance moves on. What happens to, will we have 50 rupees debit card or credit card the way you have UPI, and how will be usage increase, and will we move towards a pure virtual card instead of card getting into a mobile? It is actually virtual all the time, right? So your thought process and your thesis.
Yeah, so I think first of all, I mean, UPI, I think all of us 5 years back would not have, would not have visualized what the power of UPI could have been, right? When Mr. Nandan Nilekani and NPCI and Mr. Hota, who sits on our board, was chief of NPCI at that time, I don't think any realized. So clearly a big boon to the ecosystem from a complete perspective. Now, I think when it comes to credit cards, I think there are some data points. So I was reading something that said number of merchants accepting QR codes are apparently 5 times more than those accepting POS machines. Just before this, I was with my team and we were looking at launching something called a soft POS, where there is no POS machine. There's only QR code, there's only, tap and pay kind of stuff on a mobile phone. So clearly the world is moving beyond just the point of sale terminals, and other modes of payment are coming. And that's how I think UPI has really caught on with things. Insofar as credit cards is linked to UPI is concerned, early days, I think all the banks are working on this to try and get the dynamics of it right. My sense is that it will take a little time, but both merchants and customers will gain from it. And why do I say that? Because I think when you're at a merchant location, that's where you kind of take a decision point as to whether does this transaction go through my credit card or does it go through my debit card? And I want to be able to give that choice to the customer for a wide range of transactions. You're right, Sameer, today, traditionally, I think customers have said, large value, I will use credit card, small value, I will use debit. But I think we want to take away some of that from the customer to say, you decide which is the most appropriate one and you choose. You've got a UPI in front of you. You want to switch it to your debit, do it. If it's that period of the month when probably your funds are at a low level and you want to use your credit card, do even a 10 rupees on credit card. Nobody is telling you not to. It's all digital in any case, right? So where is it? So I think UPI will give that flexibility to the customer. And in my view, from a merchant standpoint also, it will increase the access that the merchant has in terms of how they approach customers and what they offer to customers. So I think it's a very good thing for the industry as a whole. Obviously, there is one point that I think the industry is working through, which is to say what will be the dynamics of it from a kind of cost/profitability perspective. Cost less, but I think profitability, merchant discounts, and a couple of other related aspects which the industry as a whole will evolve on. So profitability and revenue dynamics, I think we'll need to do a little more work, but sheer ease for the customer, ease for the merchant, no doubts about it. And it will expand. That's my view, Sameer.
Brilliant. Just time for last one, maybe one question. Specifically in terms of, let's say, if a new entity wants to get into the cards, and it can be, you can assume from a co-branding card or a bank starting it, or many NBFC also can now start a card. What would be your advice to them how to go start building it out?
First of all, I think entering a credit card industry is a very exciting space. It's I think one of the most exciting retail products in my view, because of its kind of brand association, the ability to do analytics on it. I mean, I'm sure debit, all of them have some of it, but some of credit cards is probably the most exciting retail product, and they're literally the face of the entity to the public, whether it's a bank or a fintech. To anybody wanting to think, one, I think we all recognize there is a huge market opportunity combined with, there's a growth of e-commerce, there's a growth of contactless, there is a lot of change in customer behavior. So the market, I think, is kind of goes without saying. We all recognize what the market is. A couple of things that I think we will have to keep in mind. One, getting the customer experience right. It's something that we in the bank devote a lot of attention to. And I know the partners I work with also devote a lot of attention to, because you have to get the customer experience right on all products, but particularly on credit card, which is a very high touch product. So you have to get the customer experience right, perfectly right. The second aspect is, what is going to be unique about the card? And it could be anything. I mean, like SBI launched a payback card, right? Cashback card just a month or so back. Somebody else launched something else. One card, for example, has a proposition which is a metal card. That's their thing other than the digital experience. So what is that one or two things that will be the hook for customers? Get that right in mind. Understand the regulatory landscape well. I think there's absolutely very good clarity now on regulatory landscape when it comes to credit cards. And I think that's a huge boon for the industry. We ourselves have been very, very fortunate to get that clarity, because I think it helps makes everything reasonably clear. So get that, understand the regulations, etc. I think it's extremely important to be clear on the financials, Samir. Some of the characteristics of the market are changing. There used to be a day and age when players would have revolve and EMI rates in excess of 70-75%. And therefore it was like literally bread, butter, and part of the jam used to come from interest income. The dependence on interchange was much lower. Those days are gone. I don't think we're going to be seeing, a mature business may probably see an interest earning component of anywhere between 50 to 55% between revolve rates and EMI rates. Somewhere in that zone is what I think it will be. So get the financials right. So, what is the interest bearing component? What is the non-interest bearing component? How do the dynamics work with interchange, etc.? Get that very right. Understand how the financials will work. Absolutely have your risk parameters well understood and think, because delinquencies can be mind-bogglingly difficult to handle if you don't get it. So if you get all these right, I think this is the thing. Today, the technology is available. I don't think it's so much of an issue to get the technology right. It's to get the customer proposition right, get the regulatory landscape right, get the financials right. And I think we are in business. You're on mute, I think, Samir.
This is great. I think Gyan ki Ganga beh rahi thi, मैंने कुछ सीखा. I think I'll have to go through it one more round to it. I think, but we'll spend a lot of time to understand your session and deep depth of it, because I know you speak on one part, but it actually means a lot of stuff around that. So thank you, Shalini, for joining us. I think this is amazing. Thank you. Thank you,
Samir, and thank you to everybody. Ram, hi. I can see you. Aishwarya, hi. I can see a lot of my friends in the audience. So hi, everybody. Yeah, thank you.
Yeah.
Thank you, man.
Amazing a session where panelists have not left, right? Normally you have events where people just leave. I think this is.
I can see my head of cards, CB is also there, Chitrabhanu. So I can see all of them there. Yeah. Nice meeting you guys virtually, and hope to see you guys soon. Thank you, Samir, for this session. Thank you. Bye, everybody. See ya.
Thanks, man.
Yeah. So with this, we move to the next segment, or rather the closure side of it. I'll just our next step ahead. We are coming out with a credit card report very soon. I think formally we'll launch as part of Bharat FinTech Summit, which is coming up very, very soon. So I think this is crucial. Maybe before we proceed, maybe a quick point ahead. So please watch out. I think ecosystem will be very depth. We'll explain how the credit card works. If you are a new issuer, what should you look at it? What are the trends which we see in depth? What are the innovations which are coming? And I can tell you that based on today's session, we will actually going to update more, because there is so much of insight we got today. Going ahead in terms of Bharat FinTech Summit, I think we will have a credit card face-to-face session as well as part of the summit. So we are going to have almost sort of 200 plus speakers, 40 plus panels. So if you want to see what it is about, go to bharatfintechsummit.com. You'll get a lot of details. It's coming up really big, right? So I think if anybody is not aware of it or you want to know more, please go. If you want to sort of buy the tickets, everything is available. So go ahead and do that. Given its content is very, very crucial for us, we will actually focus a lot on master classes. Master classes was where we will have practitioners talking about how to build businesses. I mean, one of the thought process I had was maybe we'll ask maybe one of the leaders here to actually say how the business is built ground up with some of credit card Pathshala types, right? I think that's what I can think about. So I think this is crucial. Also from a sidelines perspective, and you just be ready for it, because I think it's 2 days, so the engagement will be depth. So please reach out to us if you have any questions. On a side note, from actually on the Sunday, so my Sundays are back. On Sunday, we are kicking off our executive program in FinTech Open Banking as well. And if you want to join that session, please reach out to us. And I think this session will run for almost 6 months, with 3 months of segments on digital banking and all of that. But after that will be specialization as well. So if you want to specialize in blockchain, if you want to specialize in entrepreneurship, or you're only looking at digital banking, there's a 1 month specialization, all of that. But I'll go ahead and maybe ask for a closure remark from both Ram and Aishwarya, and then we can close.
Samir, this was wonderful. I learned a lot from today's discussions, and I see that we have a long way to go. I think the road ahead is very, very exciting. There are a lot of challenges: product challenge, tech challenge, and like ma'am said, as we actually expand into the expand credit into the country, what do people like? I think figuring that out is going to be very, very challenging, but at the same time exciting.
I think I would totally echo what Ram said. When we set out building this, right, a lot of this knowledge, a lot of this challenges were uncovered with a lot of conversations organically, right? But as these business, or rather as we evolved, it was fantastic to have a session like this. Samir, kudos to you for pulling this off. We had actual operators across the table coming in and telling us what's going on and what are the challenges, right? I mean, Sudipto telling us how tech is driving, Shalini ma'am telling us that there is no paper forms. I mean, I am getting goosebumps taking away all these learnings. And it is also heartening, right? When Saurabh said that the experiences need to be embedded within the partner app, that might be the way to go, because the distribution points are fast changing. The attention span is fragile, and the engagement heavy, engagement led product like credit cards, I think these winds of change are really happening, Samir, and only the strongest ones will survive. And at Hyperpace, we are happy to be building in a ever-evolving space like this, and something that's bound to be completely disrupted. So we need to say the future is going to be a lot of fun building out the tech stack or the right technology to enable for a whole lot of these challenges. Thanks again for the entire digital team who has worked tirelessly for this. Thank you, Samir.
Thank you. And thank you for supporting us. I think this event wouldn't have been possible without both of you guiding and supporting. And I think it has come out. I think I'm so happy to see these panelists sharing insights as well. And of course, to the audience who joined in big numbers. I think typically on a session, you say 30, 40, 50 people joining. I think we started with 200 plus, right? So I think this is brilliant, and we still have a lot of people out there. So thank you guys. We'll be back with Bharat FinTech Summit coming up. So please join us there. Thank you and bye.